Buying Melbourne, where capital meets property. I'm your host, Madeline Roberts, and today I'm joined by a special guest. But first of all, I just want to say a thank you to our sponsor. So our sponsor is Frame Finance, and I'm here with the creator of Frame Finance. So Imo, why don't you tell me a little bit about your business, what sets you apart, how you started broking? Give us a lowdown.
Amazing. Absolutely. Thank you for having me.
That's okay.
So, as you said, my name is Imogen Alexy and I'm the director and a mortgage broker.
Can I just quickly say something? Alexy, I actually kind of thought was like your middle name because it's like very cool and edgy. Is that made up or is it real?
No, it's real.
It's kind of like a porn star name.
Oh my God, I've heard that so many times. And then my dad says, but I'm the original sexy Alexy.
It's like, it's really cool last name.
Thank you.
Yes.
Frame is around a year old now, so it is a baby, but we are all quite experienced. We've all been in the industry for quite a while. So I've been a broker coming up probably 6 years now.
Yeah, right.
And had a little bit of experience in banking before that. So I sort of started at the very, very bottom in the contact centre and did the phones 11 till 7, crazy hours. I learnt everything and then sort of worked my way up through the bank into the lending area and then realised working for one bank is great, but why would I work for one bank with one set of criteria and say no to people purely just because of a policy because they didn't fit in a square box? I thought
they didn't fit in the frame.
Exactly. We think outside the frame. We reframe things around here.
I love that.
So I realised pretty quickly in that role that, there had to be a better option. And I think back then, broker was a bit of a dirty word. Started working in banking. Mortgage brokers almost had the connotation of like stockbroker.
Right.
Or like pawnbroker. That's probably a better way to put it. So a lot of people thought that they were a bit slimy and you went to them if you were trying to do something that was like a bit dodgy or not quite right.
Right.
Obviously in the years from then it has shifted significantly.
Oh, yeah.
And that may have been my misunderstanding, but you do kind of hear that sentiment with older people because back in the day, potentially that's what they were there for, to find people a solution if they were like the bottom of the barrel.
Yes. Do you know what? I remember growing up around the Mornington Peninsula, there was like this brokerage in Rosebud and I actually went there when I was really young to purchase a property and I went through them and it did feel like you drive past and it was just, I understand what you're trying to say. It was like almost like a loan shark vibe. You hear that a lot from older people, like a loan shark. You just don't know who or what you're going to get. You could just go to your bank, so why would you go there?
Exactly. But now obviously people understand the value in a mortgage broker and that they still represent the same lenders, but they give you all of the choice. And so I realised pretty quickly in banking that there are so many options out there for people that it just simply does not make sense to walk into one bank to be sold their products because they don't have any obligation to say, hey, Maddie, there's actually other options out there that are better for you. They can simply sell you whatever product they have and that's okay. Whereas as a broker, we have to work in clients' best interests. We're bound by best interest duty. So
I actually didn't know that.
Yeah. So it's literally called best interest duty.
Wow,
and we are bound to recommend the top 3 products based on someone's circumstances. And obviously everyone's circumstances are very different and they change. But we have to recommend products based on what is best for your circumstances. And that is amazing for a client, for an individual, because it means that you know that whatever you're being recommended, there's no bias, there is no we're giving you this bank because we like using them. It's that is in your best interest.
It's so funny because whenever I'm speaking to clients and I'm saying, have you got pre-approval and where from, and they say, we've just gone to our bank, I think that's so dinosaur of you. It's branch out, get the best option.
Yeah.
And don't be loyal to the banks, but then they'll say, Oh, but we've been with them forever. Okay,
100%.
they don't even know you and they do not care.
Certain lenders that we won't name get people in very young. And I have no doubt that it is the smartest strategy by going into schools. And we all probably experienced this when we were younger, and they open you up a bank account and they give you a piggy bank and it's really cute. And all of a sudden you have a program where you're putting your pocket money into that bank account and then you stay with them for 30 years.
Very smart. It's very tactical. And everything the bank does, it's not within your best interest because guess what? They're billion-dollar corporations. They do not care about you.
Yeah.
So the sooner people realize that, the better. This is a little bit off topic and we're going to go into other things shortly, but this is something that I also wanted to mention. I saw this in a broker forum the other day. There's a particular lender who knocks people back with brokers, but then they go in and they give them the loan. Have you heard that?
Oh, I know exactly who you're talking about.
That's crazy.
Because they have a very strong reputation within the broking industry. And I actually have a personal story about this.
Okay, go.
Because my brother bought a property recently, and I'm so sorry if you're watching this.
What's his name?
Edward.
Sorry, Ed.
Sorry, Ed. Love him, but he had taken out credit cards as people do when they're younger and travelled and that kind of thing. And his credit score had been slightly affected by that. That's okay. It happens. We had a look at some options for him and he wanted to use the Help to Buy scheme, which is the government shared equity scheme.
Oh, yeah.
There's only a couple of lenders that do it. And on a broker panel, you can only use one in particular. So we are limited to that lender. They have not strict, but, reasonably limited parameters around credit scores and missed repayments and things like that. So I just basically said to him, look, they're going to decline you. Both of the lender options that you've got are going to decline you. You need to get this sorted first. But on the off chance they don't, you could potentially try walking into this particular bank's branch and just give it a crack. I knew if I submitted that loan, not that I can, but if I could,
They'd knock you.
They would decline it on the spot. They would auto decline it based on credit score before it even got to a human. He walked in there, he had pre-approval the next day. A week later, he bought a property and he's settled.
So I'm very happy for Ed, but doesn't that tell you so much about their integrity?
Yeah.
It's just about money.
It is absolutely skirting responsible lending requirements, and I don't know how they get away with it.
They'll get cracked down eventually, I think. There's always these different, what are they called, where you can be a part of a large lawsuit.
Yes.
Yes.
Class action.
Class action, that's the one.
Yeah.
Every now and then I always get emails like, you're a part of this class action.
Yeah.
And there's always something.
Did you own a Toyota Cougar in
Yes.
1997?
I know. I think there was once I was eligible for $10 and I had to give them my details and I thought, I can't be bothered. So
No.
I've got $10 sitting somewhere. Hopefully it's accruing interest.
Yeah. And you see banks get massive fines all the time, but they make billions of dollars of profit, so they don't care.
It would be factored into their profit and loss.
Definitely.
Per year.
Yeah. So it's crazy, but I hate seeing things like that because at the end of the day, and everyone's going to have different opinions on this, but personally, as a broker, I believe that buffers, parameters are actually there to be in a client's best interest, and they're there because they want to protect the client at the end of the day. Yes, banks, they turn a profit. Yeah, we get that. And they're always looking at their bottom line. Customer-owned banks are a little bit different. I hold them separately because obviously they're not worried about making profits for shareholders.
And for those listening, what's a customer-owned bank?
Customer-owned banks are places like Bank Australia. There's actually heaps of them. Great Southern Bank's another one we use all the time and love. But basically what they do is they reinvest their profits into the bank. So they don't have shareholders. The customers are actually the shareholders, hence the name customer-owned bank. They're sometimes referred to and used to be called mutual banks or sometimes like a community bank as well. So Bendigo Bank's another one that comes to mind. And they're great because instead of making money for shareholders, they're thinking about the customers in everything they do, and that's at the forefront of what they do. Obviously, they're still making money. They're still a business, but instead of that paying out to other people, it's going back into the bank.
Nice.
Yeah, so I really like using them for that reason. But I think ultimately with all variety of lenders, parameters in lending exist to protect the client. So buffers exist because if you're taking out a loan and it's at the rates, let's talk about COVID, right? The rates were at 1.99 at some points, even 1.89, 1.79. If you took out a loan of $1 million then, and then the rates went up 5%, as they genuinely did, so we're in the sixes now and they've been higher, you're in pain. You're struggling. Like you are. You can't repay that loan. Like that is crazy. And the banks are assessing your circumstances. They have a buffer in place. Most of the time it's 3%. Some lenders will have lower buffers. And after COVID, when the interest rates spiked, they had to reassess that because a lot of people were stuck in their mortgages, and that's where that term mortgage prisoner came about. And so they had to put a 1% buffer in place for refinancing for a lot of people to get them out of their loans into a lower interest rate if they could.
Because they were stuck.
Because they already had the debt.
Yeah.
But I always come back to that when I think about why buffers and parameters do exist. And that's why I think it's so negligent when a client gets knocked back but can walk into a bank branch and they'll just give them the loan.
That's crazy.
Because they're being declined for a reason. And ultimately, yeah, the bank wants to lend people money. They're a business. So if they're saying no, it's because they think it's going to put them in a bad position. Financial hardship, whatever that looks like. Ultimately, they're there to protect the customer.
Yeah. And interesting. And I suppose it feeds into our next topic of discussion. So it sounds as though that particular bank is quite happy to lend money at the moment. Are you feeling like banks are lending quite comfortably and confidently at the moment? Obviously, there's some changes happening. We've got interest rate hikes, but are they pretty much handing out money at the moment? I mean, if one bank you can walk in and get a loan like you can a credit card, it sounds like you can.
It's a really mixed market.
Okay.
I think we're seeing, and we have been seeing a bit of a shift in the market since the rates have started rising again, since all the changes with interest rates, debt to income ratios have changed as well, which has reduced banks' borrowing appetite a little bit.
Okay.
And all of the trust loan changes. That has shaken up, I suppose, the way the banks have been looking at clients with multiple properties, but they are all still lending and they are all still wanting to lend. And we tend to find that when one bank pulls back in a space, another takes that opportunity. And so, you know, using that trust loan space as an example, the banks have pulled back, the non-banks have pushed forward.
Okay, interesting.
When one pulls back, another is like, okay, great, this is our opportunity to seize business.
We're going to step in. Yep. Okay, that's very interesting to hear. I'm actually quite surprised because at the moment I am getting a lot of real estate agents call me and they're saying, hey, are you feeling a change in the market? And from the buyer's perspective, I'm actually not.
Yeah.
When there is a change in sentiment and, you know, people are pulling back in some areas, I suppose that's when people become more strategic. So I am still seeing a very large influx of clients.
Yeah.
Perhaps they're all more comfortable and confident going in at that lower price point, which is what we naturally see when it comes to, you know, when there's less confidence in, I suppose, the economy, that sometimes shows up in people's confidence in where and what to purchase. So obviously, naturally, they're going for those cheaper price points.
Yeah.
But I'm still seeing that strong level of inquiry, which is quite interesting. Something that I also wanted to touch on today was units, okay?
Yeah.
And this definitely comes into that cheaper price point. Now, this all came about actually because over the weekend, I went for a staycay in the city with my family, and we've been doing these little city staycays recently, and I'm really enjoying my time in the city because, as you know, I live down on the Mornington Peninsula, so it's a very different flow there.
Yep.
But I love the vibe of the city. So I was thinking, perhaps it might be a good time to buy a unit. So I just wanted to have a look and see what was happening. Now, I just had a look in St Kilda because I thought I want to go in at a cheaper price point if I was to buy a unit. This is not an ideal investment in terms of like I would never tell somebody to buy something as an investment because it feels right or this is what they want to do. So ignore this. This is just
suiting your lifestyle.
Yeah, this is just a bit of a...
It's a lifestyle purchase,
right?
Okay,
yes, and you're allowed one every now and while, yes.
Absolutely.
And I was really surprised because when I had a look at units around St Kilda, a lot of them are under offer. There's hardly any available, so I thought I'm going to check out the data. Now, I've got a few data pieces here and I'm going to break them down with you just to see what you think, and then we can talk about what you're seeing because obviously you are in the Melbourne market and you have a unit yourself.
I do.
And do you do unit living as well?
Yeah, I do.
Okay.
Yeah,
okay.
both. So when I first purchased, I bought a unit, took advantage of the first home buyer advantages. And this is something that is super common and we see it all the time with first home buyers. It's a stepping stone.
Yeah.
Most of us can't purchase our first property as a beautiful house in the inner east. And I've grown up in the inner east of Melbourne, and so for me, I wanted to be close to my family. I wanted to be close to friends, and it was a decision that I made to stay within that area and the inner east of Melbourne instead of purchasing something that was probably the same price or a little bit more affordable further out. So I chose to buy a unit and then lived in it for a year or two and then leased it out, which
Amazing.
is super common. However, it doesn't always work. It doesn't always work that you buy an asset like that and it holds you in good stead for the rest of your financial journey. In my case, I was very fortunate, and I can go into a few reasons why I think my unit performed better than some others and conversations I have with clients when they're looking at units and what to look for and what not to look for.
Amazing. Can you share that with the listeners? Because I really want to be able to break down the differences between units and houses and when units are a good idea, because I'm seeing right now in the market that it probably is a really good time to be buying a unit in Melbourne in specific cases. So tell us what set yours apart and what type of advice you give to your clients.
Yeah, absolutely. So there's a couple of things, and everyone's lifestyle is different, right? So it's really going to depend on you personally and what you're looking for, especially if it is going to be an owner-occupied property first. But a few things I talk to people about are the size of the unit is a big one. If it's something that developers now are not going to replicate, so it is an older red brick style apartment from the 60s and they're built bigger, they're built solidly, and it doesn't make sense for a developer to be building units of that size these days the same way they used to, because it isn't profitable for them. So they always hold their value quite well because they're not going to be replicated. So that's the first thing, especially if it's a unit with like 4 in a block. Like that's just not going to be replicated these days.
Not at all.
The second thing is having a feature that sets it apart. So the unit that I bought, I should call it an apartment because it's actually more of an apartment than a unit. I think when people think about units, they probably think about the like little ground floor
with a courtyard,
with a courtyard.
Yeah. So yours is in a building.
Mine's in a building. Yeah. It's a 3-story building. So that was a big thing for me. I didn't want it to be a high-rise development.
Why didn't you want that?
High density is tricky. High density is really tricky. The banks don't love them.
Don't
know. Banks have high density policies. They also have building registers, which is something that a lot of people don't know about. And a building register is essentially how much capital the bank has lent to apartments in a particular building.
Really?
Yes.
That's so interesting to know.
So sometimes the bank will be completely happy with what you've purchased. It fits in with all of their parameters, and you get to the last stage and it's on their building register and they won't lend to any more apartments in that building.
Wow.
And it's purely just because they have a large amount of money already invested in that building and they don't want to put any more into it.
That is so interesting.
Yeah.
I didn't know that at all.
Yeah. Another reason to use a broker, right?
Yeah.
Like these are the things that we have in the back of our minds all the time, and we're looking, as soon as you say to me, hey, I'm interested in this property, if it's an apartment, I'm doing that due diligence straight away before you put the offer in so that you're not making that mistake. And it, like most of the time, it's the case that, hey, if it's on a building register with one bank, another bank will take it. But sometimes it's really tricky because, you know, you might have a small apartment size policy that you need to use, and it's also on a building register and it's considered high density. So you're crossing over all these different policies and you might only end up with 1 or 2 lenders that you can use. And so if it comes down to 1 or 2 lenders and then it's on the building register, you're stuck.
Okay, so if you're looking to buy a unit or apartment around Melbourne, definitely reach out to Imogen. You need a broker to be able to talk you through this. Don't go bid at auction without having some sort of pre-approval and stuff, because
it can get tricky.
This sounds awful. Yeah, okay.
It can get tricky. And banks have different opinions on different suburbs. Like, you know, if you're looking to borrow around Queens Road, St Kilda Road area, that can be really tricky because it's quite high density.
Sure.
Same with the CBD, same with Southbank. They're all tricky.
Yes. And so I suppose, like, from a buying perspective, particularly for investment as well, I would never touch high density. There's so much supply. There's never going to be enough demand for that level of supply. If you're in a building with 100 apartments, what sets yours apart?
Exactly. And that is another thing I always tell people to look for.
Yeah.
So my particular apartment had a 28 square metre balcony. it's not common. It was also on the top floor overlooking a side street that wouldn't be able to be built out with like a lovely leafy green outlook. So things like
Amazing.
that where there's just less chance of it being replicated over and over again is what I would look for personally when buying apartments, because I think it will hold you in good stead for the apartment to maintain their value moving forward.
Yeah, sure. Okay, so I agree with everything you've said. Let's have a look at some of the data at the moment for some of these units and property prices across Melbourne. I've just highlighted a few.
Awesome.
So, for example, St Kilda houses, the median house price is 1.345 at the moment. It's down 1.46%. Days on market, you're looking at 46 days. So not really inclining, not really declining.
Yep.
But units, this is what kind of pricked my interest over the weekend. Units are actually up 0.3%.
Amazing.
Yeah, so that's for St Kilda, and that just kind of tells me that obviously there is this level of demand starting to come up. So obviously we're at the bottom of the Melbourne cycle.
Yep.
It could be a good time for some units. 38 days on market in February in St Kilda for units. But March was 26 days on market. So there's
dropping.
Exactly. There's been a fair bit of interest, a lot more demand obviously over the past month. So I found that very, very interesting.
I have some thoughts initially on why this is the case.
Go for it.
So there's a few things, and I think based on the market that we are seeing, people's borrowing capacity has obviously been pulling back.
Yep.
However, I think it's a buyer's market. So I think if you are a first home buyer or a first time investor and you're looking to get into the market, now is such a good time to buy, but the purchase price has pulled back. So I think that is prompting people to purchase units over houses because they simply can't afford to be spending the same amount as they could before. I also think with purchasing units, there's always a demand for it, right? Because people will, and it's always that age-old debate of getting into the market, right? It's so tricky to get into the market, that first step you take, and that's why we call it a stepping stone. It's so tricky. So there's always a demand for people to be buying units because let's be honest, most of us can't afford to buy a house in Melbourne. It's just not going to happen.
It's expensive. No.
For your first home.
Yeah, the median house price for these units are on here that they're still all around that 750, 800,000. So that's just for a unit.
Yep.
So, for example, if we're going to talk about the area you're from, Hawthorn. So median house price is around 2.5 million. Now, consistently, that sits at around 28 days on market. So it's always a very consistent market. I spoke about this with James on one of our last episodes, and that's because there's such a huge demand there for the schools.
Yeah.
Units, they're actually sitting at around 707,000, but they've had 6.8% growth and they're only at 35 days on market. So there's obviously that very consistent demand there as well for the units. And they're going up in price. Days on market is low. So all of these things are quite interesting because knowing that we're at the bottom of the Melbourne market, it is probably a good time for some units, not all, but obviously some, as we've spoken about, there needs to be that scarcity and that level of demand and that appeal. I think obviously buying any type of units that are below replacement value as well, like, you know, that's going to add value. So I wanted to read this part because I don't want to muddle it up, but KPMG is forecasting Melbourne unit prices to grow 7.1% in 2026 while they're only forecasting houses to grow 6.6%. So when you see a forecast like that, what do you think is driving it?
Yeah, so interesting. So coming back to the Hawthorn units, I have a very mixed opinion on Hawthorn units.
Okay.
Purely because there's quite a bit of student accommodation.
Yeah, right.
And a fair bit of higher density development happening. It is one of the areas that's been zoned for higher density development.
Has it?
Yeah, so it's quite interesting in those areas to watch what happens.
But then you know what? I would suggest that then those units like you spoke about that are diverse, they're going to see a really big value increase because when you have this opportunity to purchase all these high density cookie cutter style apartments next to something that has
tiny, and some of them are tiny.
Yeah.
Like the student accommodation, like I don't even know how it's legal to live in. Some of them are so miserable.
Yeah, I've seen some and just, I mean, as well, studio apartments, things like that, huge avoid.
Huge avoid.
I'm going to tell you some of the driving factors that KPMG are suggesting that are going to affect unit prices and see them grow substantially. So affordability compression, which we just touched on.
Yep.
population growth hitting a specific demographic. So Victoria grew by 146,000 people in the year to September 2024. So it's the largest population increase of any state. But who are those people? So overwhelmingly arriving into Melbourne's inner and middle suburbs, many are renters first and then buyers. So they're not buying 4-bedroom houses. They're starting out, as you mentioned, entry-level properties. Driver 3, the rental market is screaming. So I'm sure you see this.
Yes.
Rental vacancy is at an all-time low. You see some videos on social media. There's like 20, 30, 40 people lining up outside of properties.
Oh, it's crazy. Yeah.
It's very competitive. So those people naturally want to move into units.
Yep.
And something that's really interesting to note is I think around 2019 to 2021, somewhere around there, we had this huge influx of apartments, and that's when this supply issue really also came about. So that's areas like Southbank and Docklands where they just slapped up lots of apartments. So obviously that's that heavy density that we're talking about. What I also wanted to touch on is we've seen excellent growth in places like Queensland and Perth, and especially units and apartments.
Try and buy in the Gold Coast.
Very expensive. Very expensive.
And Brisbane. Brisbane unit prices baffle me.
I've been seeing that they've been growing a lot.
Yeah.
It's very interesting.
And then we come back to Melbourne and we look at the price of units here. And in all honesty, this is one of the reasons why I want to hang on to my unit, because I look at the prices for units in Brisbane and the Gold Coast and Sydney. Obviously, everyone knows Sydney is just
very
mental to buy in, and come back to look at the prices in Melbourne. And we are so fortunate because you can still enter our market for a lot cheaper purchase price than you can in the other states. We're the only state now where I feel like it's fair for first home buyers to get their foot in the door. It's still tough, but it's exponentially easier than the other states. The only thing that I will mention is that our stamp duty concession is a lot lower than other states. And I think that that's something that also prompts unit purchases, because there's a big difference between saving a 5% deposit and saving a 5% deposit plus $50,000 for stamp duty.
Stamp duty is huge in Victoria. It really
is. Huge. It's the highest of any state, really. And the lowest concession. Oh, I don't think it's the lowest, but it's definitely lower than the other states.
Yeah, in comparison with every other state, we've definitely got the highest stamp duty. I do think though, and this is the trend throughout this conversation, when we look at those other states and cities and they've had huge growth in their unit space, we will see, by the looks of things, growth in our unit space. But again, it needs to be the right unit, doesn't it? That's what it all comes down to. So location, type of unit, all those things. But I definitely don't think they're a bad investment for some at the moment. I actually was thinking about a unit that we did together. This was in Townsville, but I think the client purchased around $260,000 and that's worth over $450 now.
It's crazy.
Yeah, that was only like 18 months ago.
Townsville is another one of those markets. My cousin works in the Defence Force and she was trying to buy her first home in Townsville. There's particular areas that are better than others. And so she had very particular suburbs that she wanted to buy into, but she couldn't, there was nothing. There was nothing on the market. I thought she was exaggerating. And then I ended up helping look for properties with her. And again, use a buyer's advocate, because she ended up just buying off her neighbour. She got extremely lucky. Her neighbour was selling, and that is the only reason she could get into the market, because everything that was going onto the market was selling immediately.
Yeah, right. Well, it's definitely been a very strong performing market, but that's why I suppose at the moment Melbourne is just such good buying. But yeah, I just recall that particular unit. I feel as though it had about a 40-45% increase.
It was crazy.
It is a lot. So units definitely are not exempt from growth.
Yeah.
At all. Do you help many investor clients get into units? Like, what's your view on that?
Yeah. Absolutely. And I think that they are an important thing to mix into your portfolio. And it also depends on what time of your portfolio you're looking at adding a unit. So I'm very big on, as you know, like we've done a lot of property portfolios together. And I'm very big on structuring the portfolio so we have a mix of properties that are flagged for capital growth and properties that are flagged for rental yield. And they can obviously be one in the same with a property, but it is more rare that you will get one property that has really strong growth and yield. It's more common to find a property that might have slightly lower capital
They're kind of
gain
offsetting each other, aren't
exactly, right? So adding a unit into your portfolio for a lot of people comes when they're looking at the cash flow. So they're adding units potentially after they've accumulated a few properties. The first few properties, they're focused so heavily on growth because they're using that equity uplift to form the deposits for the next purchase and the next purchase. Whereas a little bit later in their portfolio where they're kind of happy with the amount of properties that they've got, or they use the earlier properties to pull equity out of to form those deposits, we need the cash flow. We need to start having properties that perform really well and are positively geared to the point of putting some money back in your pocket so that you're able to start getting ahead again. So I really think they're a great addition to a property portfolio. I also think, as we know, the rental market is really tough, and again, not everyone can afford to lease a house, right? And so I always think on the other side of the renters, and it's ethically, it's a tough one for me because I do believe that everyone deserves the right to buy housing. And so we don't want it to increase in value to the point where it's impossible for people to enter the market. And I know that this goes against a lot of being a mortgage broker and having an investment property and that kind of thing. But I do believe in ethical investing, and I think being a good, responsible landlord is really important. And we want good people who have property portfolios, in my opinion, on the smaller side, to own rental properties. And I say this because I've also seen the flip side where I've got clients who have had property portfolios with 20 plus, let's just use that as the line in the sand. They simply cannot manage that portfolio and look after the tenants to the same degree as someone who has 5 or less.
Interesting.
And I think that there's obviously everyone's different. If you are someone who that's your full-time job and you live and breathe property, like I would use you as an example, right? Like you've been in property management, you've been in real estate, and this is your job. So if you had multiple properties, you would look after them really well.
I'm going to say I am so bad because I'm so busy. And so I'm not so, no. So this is painting a really bad picture. Let me just say, I actually tell the property managers to contact my husband. That's all I'm saying because I'm so bad at getting back to
these girl, I've done your mortgages, I know. I've tried to get those documents, I know.
I'm a real pain in the ass, I am. But no, like recently, like we're always like, okay, we didn't need an air conditioning at this property, but we want the tenants to have it. We don't want to feel uncomfortable.
Exactly.
All these little things. So I completely understand that. And you know what? I actually had an episode on Game Plans with Joey a few weeks ago, maybe a month or two ago, and we're just talking about, 1% investors, things like that. It used to be, if you have 6, 8 properties plus. Now it's more so they're looking at it from like a value perspective, which makes sense. Yeah. I honestly think 20 plus properties is quite grotesque.
It's a full-time job.
It's an administrative headache. Yeah.
It becomes, and I'm going to use this word, and I know that a lot of people are not going to like me for it, but it becomes selfish. It really does. Like I think it becomes about greed at that point because you're no longer thinking, you're like, everyone wants to get ahead in life. Everyone wants to make money. Everybody wants financial freedom for themselves and their family. I get that. But how much do you need?
You're feeding the ego at that point. Yeah.
At the downfall of others. Because if you are owning that many properties and you've amassed that much wealth, it is starting to harm other people.
You can diversify into things like commercial and things like that.
Commercial property is an amazing thing to do. If you've got a good residential property portfolio, commercial property makes so much sense.
Yeah.
It really does. And I think, again, like adding the units in, adding commercial property in at some point, the tenants pay all the outgoings.
Yeah.
Business owners, like I'm a small business owner, you're a small business owner. It's tough, but we are in a better position than someone who is a PAYG income earner earning $80,000 a year trying to enter the property market.
Yeah, 100%.
We're in a better position. I would rather someone take advantage of me than them. You know what I mean?
You're very kind. She also doesn't let her team get called after hours.
No, we protect work-life balance around here. You can call me anytime. Just don't call them.
So lovely. Yeah, okay, cool. I feel like you've given so much really good tips and feedback, and I hope listeners have taken something from today. Don't hoard properties. No. No. Just, surrounding the unit market. I think there is momentum growing in the Melbourne market. I'm always someone who you hear investors and buyers agents always like, oh, you want property for the granny flat and things like that, so you need land and blah, blah, blah. Yes and no, okay?
Like there's a place for it for sure.
But it's not the be-all, end-all all the time.
It's not the be-all, end-all.
No.
I hate that rhetoric that you hear people say of, don't buy an apartment, don't buy a unit. I hate that. Because at the end of the day, that's what most of us can afford to buy. And that's how most of us will enter the property market, whether it's rent vesting or purchasing something to live in. Yeah. Most of us are not starting at a 4-bedroom house.
No. And you know what? There are ways to do it smartly.
Absolutely.
Smartly. So, there's ways that you can do it in a way that you can still see capital growth. Just be smart about it. Be wise about it.
Use a buyer's advocate.
Call us.
Yeah. Use a good broker.
Yeah, exactly. All right. Well, thank you so much for joining me today. I feel
Thank you for having me.
We could keep going. We could, yeah. But I really appreciate you joining me today. And if people want to reach out to you, how can they find you?
Yeah. So we're Frame Finance, frame.finance on Instagram, www.framefinance.com.au on the web. What do you call that thing? The World Wide Web.
Don't use that anymore.
What is that?
No, you'll be tagged in these posts as well. But yeah, you know where to reach Imo, and thanks for joining us.
Thank you.
Buying Melbourne, move with intention. Until next time.